Welcome to TradeTheMBI.com. This is John's reports for the 5th of February. New highs continuing, getting ever so close to breaking past that 5,000 mark. Just gets right up to the edge of it and can't quite get over. But needless to say, the reading's still positive for no real short activity of any kind. And about to see a crossover again of the cyan back above. Uh, Below actually green rising here from a DOC, so midterm buyers taking back over. So the little decline in the histogram gives the opportunity for it to rebuild and maintain the congruency of it. And we've had that nice fill back to the ABM green, which keeps things within a positive trajectory. All in all, not bad. Yes, there are still all the same difficulties economically and everything else that existed before. But at the end of the day, can you really put your money into treasuries at this particular point, given that the yield is not moving? In fact, it's going to the wrong direction, and Fed's not going to be changing anything anytime soon. So equities, only place you can be at this particular stage, or alternative currencies. That's another option. And you see a little bit of an improvement from a yield standpoint for treasuries coming back, but still it's outside the curve where the Fed is. And again, it predicates that, this continues to move, in a positive direction to keep inflation down. That would be the only justification for the Fed to make any move, because at least that would be enough to wind down the expectation of further rising inflation at this particular state. It's doing the right thing, and I think that you saw U.S. oil production reached a record, so those kind of things help. And if it's enough to sustain it, but you're still way elevated. It's an interesting thing when the U.S. is reaching record production, you still have oil prices at these levels. It's a problem, a legitimate one. From a euro standpoint, continued to struggle and no shock. You would think that there would be improvement off of the oil situation, but as you can see, more and more day by day strikes and continued things from farmers and various other groups protesting the climate change policies that literally are crippling business in the EU. It's just pretty much bringing things to a standstill for the most part. From a gold standpoint, none of that leads to any excitement, no new war activity or anything like that. So it's pretty benign from a crypto space, also trading a little bit to the sideways action. Pretty impressive from a Bitcoin standpoint, though, to have this much negative move within it and still be able to maintain it. And I think this is something we talked about where like FTX selling its position and stuff to take care of the bankruptcy for holders, and that sort of expired during this period, and they really don't have that much left to get rid of. So that extra supply sort of fading and could mean a pop is imminent for the crypto space. And of course, ETH underperforming slightly to Bitcoin in that. And most likely, if supply diminishes further, I think you see the continued disparity between the two, simply because of the very limited supply of the Bitcoin. From a 50K standpoint, pretty clean. It took the buy just right there about after the dip below the 76, right about above it, went for it and caught it right in the middle of that range. It wasn't too much of a move. What do we have? 49.43 to 72. That's pretty decent. Pretty decent. Intraday, you can see the action was pretty obvious. Pre-market, as soon as the bell rang, boom, all the way up. Filled back a couple of the positive extremes, going back into this set, and then started up again. So that was all pretty congruent. And then here in the post-market, just sort of softness, just filling back into where that positive extreme area was. Nothing special, and building right back up again. All in all, good stuff. Continue to follow the action as it comes and stick with the readings. Trade well. Anything relevant, I'll put on the Skype chat.